Hi, everyone, and thanks for tuning in to another episode of Budget Investing. My name is Dylan, and I'll just give you a quick overview of what my portfolio is looking like with this crazy market that we've been going through over the last couple of weeks. And I'm going to show you how to screen and select a stock. That way I can be a little bit less at risk during this volatility, and I know I have that security of those dividends always coming in. With being on a budget, I of course don't have a lot of money to work with every month, but you can see it's slow and steady. I'm always adding a little bit more. I got a bonus at work, so I was able to make a nice big jump. Otherwise, I'm just kind of slowly always adding a little bit of money in. Of course, February was a pretty red month for everyone, so it's a bit down, but I know that's going to come back up, so I'm not too worried. I know, for example, yesterday, things were very, very green. So it was a super green day. It was really nice to see. I made over $100, which is really nice, but I know over the long term, I can't look too much at the day-to-day values, even the month-to-month, as something can change really rapidly. Overall, I'm still up about 4.25% already just this year. I have a few stocks that are quite red right now, but I know that's going to come back and things are going to change. Like I have a few stocks that are very, very green, but that's going to change over time. The reason why this strategy works for a budget investor like myself is that no matter if what's happening in the economy, these dividends that I get all of the time are going to continue to allow me to purchase more and more stocks. It takes out the volatility because a high growth dividend paying company will have a very large market cap. They're what's considered a blue chip company. So they're very stable, so they can survive any ups or downs that may come throughout the economy. So I go to investing.com, and I'll link this in the description afterwards, but I go to tools and I go down to stock screener. So if I know I need to find a stock in a particular sector, I can select the different sectors or different industries. For today, we're just going to look at the different services sector, and where I start to screen is I first start with market cap. So I like to pick blue chip stocks. I'm going to start with a $20 billion capitalization for this company. So it's a very large company. They've got a large float. They're likely not going anywhere. They're a blue chip stock. The next thing I like to make sure, I want to get about 0.5% of a dividend at this point. I want to make sure I'm getting a decent amount of money coming in at all times. And I don't really put a cap on the total dividend, as I'll do that filtering out a little bit later. The final thing that I search for just initially is under the dividends tab, I'll go to the growth rate. So I like to start with at least a 10% growth rate. This way, I know the company's growing really quickly, like their dividends specifically, and this is going faster than what inflation typically does. So then you get a list here. I have 28 companies just within the services sector. And all of these companies are very different. So obviously you have Visa, Home Depot, Comcast, and so on and so forth. And you can pick any of these companies. This just kind of narrows it down, gives you a rough idea. Of course, you can flip through the different tabs that you have here. So if you want to look at the different fundamentals of the companies that are on here, gives you a rough idea of what their market cap is, what their current PE ratio is. So maybe a Starbucks might not be a great choice right now, as their PE is over 192. So far, Home Depot, Comcast, maybe Nippon are looking like pretty good choices so far. I'm going to pick Home Depot, so I know the symbol is HD. At this point, I'm going to go over to Seeking Alpha. So I would put in Home Depot, and I'm going to look at Home Depot on here. So this just gives me a little bit more detail of how they're doing it. On the home, on their landing page, you have some analysis from different people, and of course there's news, anything that's come out recently. But where I really start to look for myself is I look at the financials tabs, the dividend tab. I will take a quick peek at growth and peers and charting. When I look into the financials tab, I usually save this one for last, but I'll just go left to right just to kind of show you what I'm looking for. I always look at their gross profits, just make sure it's always trending upwards and staying ahead of any costs that they might have. Of course, operating income, which is nice to see that it's growing. They're making more money every year. you just want to make sure that they're growing their revenue year after year so that they can continue to pay you an increased dividend and they're not at risk of making more debt just to do that. So I like to go into a little bit more detail when I'm looking at the dividends because that's what I really focus my portfolio on. I'm not too worried about the total fluctuations of day-to-day value of a company. The dividends is where I go. Of course, if you scroll down just to the summary, it lets you know the current yield, their payout ratio, what their 5-year compound annual growth rate is, which is 20% for Home Depot, which is fantastic. And they've been growing their dividends for 12 years. So anything over 10 years is a fantastic sign. It just shows that they're able to go through any different kind of market. So I like to start off in dividend growth. And I scroll down and you get to see how much it's growing year over year, which is nice. Hopefully it's going to be moving in that upward trend and it's a nice slow increasing. And of course you can see the growth is always going upwards, and that's really important. You just want to make sure it's going up faster than inflation, otherwise your money could be better used elsewhere. The next one I'll look at is the dividend history. So it should look very similar to the dividend growth. And so as you can see, it's steady. It's always going up year to year. It'll stay roughly the same, or it should stay almost exactly the same. So it's looking like they give 4 payments and then they're increasing their dividend every year. So if I zoom out all the way to 10 years, yeah, you can see it's always slowly moving upwards and always increasing, which is a great sign. Of course, this most recent dividend that they have issued is their highest amount that they've ever done, and that'll be coming out here just this March, which is really exciting to see. The next thing I'd like to look at is just dividend safety. So I just want to make sure that they haven't gotten their dividend too big that they're not going to be able to maintain it anymore. So their payout ratio is about 50%, so 52 specifically for Home Depot, which is not too bad. It gives them a lot of money to continue to reinvest into their company and continue to grow it. So you can see the payout ratio over time. Of course, it jumped up quite a bit in 2020 in comparison to where they were at the end of 2019, where they were at around 49%, and they've jumped as high as 57%. But we just have to remember COVID did play an important factor in that. It just cut everyone's sales. Of course, you can look at the dividend news and estimates, which just gives you another idea of what's kind of happening in Home Depot's world. And under the peers tab, this lets me compare Home Depot straight across to some of their biggest competitors. So Lowe's would be arguably their biggest competitor. And then of course you have all of these other companies. Home Depot is the largest by market cap. It's almost 280 billion. And then you have Lowe's at 117 billion. And it drops off very quickly from there. But it just lets you compare things side by side. It just gives you that quick overview that you can use. So of course you can see their current trading price, their return over the last couple of years, and of course you can look at the dividends side by side. So Home Depot and Lowe's here have both strong dividends, and it just really comes down to what you're looking for. So Lowe's has a way safer payout ratio, but Home Depot's dividend seems to be quite a bit higher, and their growth rate is quite a bit larger. So it just comes down to where you want to place your money and where you think you'll get your most benefit over time. The last thing that I like to look at is in the charting tab. So if you're looking at the 1 year tab, it compares Home Depot to the S&P 500, and in the 1 year tab right now, it's showing you roughly the crash from COVID to today. So the total economy, which would be the blue line, has gone up about 34% year to date, and whereas Home Depot only gone up about 22%, which is still an important number to know. Not every company is going to recover as well as the rest of the economy might, but it's good to know that they're not trailing significantly. If we look at the 3 year mark, you can see that Home Depot's gone up actually a little bit more, so it's kind of hard to tell in the graph. But if you just look over here, Home Depot's gone up 56.5%, whereas the total economy has gone up 54%. So it's about a 1% improvement in the last 3 years. And of course, we can zoom out a little bit further, and the gap gets a little bit larger. So that's promising. Past performance will not indicate what future performance will look like, but it gives you an indication of how the company is performing. Are they keeping up with the rest of the economy? Because if they're not, maybe they're not growing anymore and they won't be able to sustain that dividend, and they might not be a good fit for your budget, as you don't want to lose money when it could be better used elsewhere. I'm now going to go in and just start Googling Home Depot, try and get any information that I can find on them, see if there's anything else that I might need to know. Maybe want to make sure that you really understand these companies very well. If someone were to ask you, what does Home Depot do? Like, how do they make their money? And you can't give them a quick 2-sentence, 3-sentence explanation. It might not be the right company for you. You want to make sure that you're understanding it and understand the risks that are involved with buying into a company like Home Depot. I know what you're thinking. A company like Home Depot, it's too expensive. It doesn't fit in my budget. But I would strongly recommend that you do purchase a company like Home Depot, because you know they're not going to risk your money and they're going to continue to generate more and more wealth for you over time. Hopefully this video was insightful for you and gives you an understanding of how to start screening your own stocks to start building your portfolio and generating more wealth. Thanks so much for watching. Please remember to subscribe, thumbs up, and comment on this video, as I'd love to hear what you're interested in learning and how I can help you on your journey to budget investing.